Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and this is episode 27 of my Dow analysis series. Today we'll be analyzing the fifth largest company in the Dow by market cap, which is Visa Incorporated, ticker symbol V. Before we get started, I do want to mention that I did start a Discord server recently, just as a place to discuss investing with anyone that feels like chatting on a regular basis. So if you are interested in joining, the link will be in the description down below, and I'll leave a pinned comment as well with the link, and I look forward to seeing you all there. As most of you probably know, Visa is one of the world's leaders in digital payments. One of the great things about Visa's business model is that they are the middleman. Therefore, they don't issue credit cards at all, which means they really don't have any credit risk. They make the vast majority of their revenue for services provided in support of client usage of Visa payment services and for data processing services such as authorization, clearing, and settlement. They also earn a decent chunk of revenue for international and currency conversion activities. So obviously, if credit card usage does go down, Visa will likely lose some revenue. However, given the expanding population and further digitalization of monetary systems across the world, I really think this is pretty unlikely to happen anytime soon. Another potential concern for Visa is that when you are the middleman, there's always a risk that you'll be cut out of the deal, and the two people on the end will just do business together and not use you at all. But in the case of Visa, the services and systems that they provide are pretty complex and are likely not economical for financial institutions to implement on their own. So I think the risk they are kind of cut out as the middleman is pretty minimal. One could also argue that blockchain technologies could be a threat to Visa's business in the future, but they seem to be exploring that avenue a little bit. And in my opinion, that system is going to take a lot longer to get figured out than some people might think. Visa's 2022 fiscal year ran from October 1st, 2021 to September 30th, 2022. So they recently reported their fourth quarter and full year results on October 25th. And in the fourth quarter, Visa actually grew net revenues by 19% year over year to $7.8 billion, and net income grew 10% year over year to $3.9 billion for the quarter. Full year net revenues was $29.3 billion, which was an astounding increase of 22% from fiscal year 2021, and full year net income also increased by 21% year over year to $15 billion. And something noteworthy as well, for the full year, payments volume was up 15%, and cross-border volume increased a whopping 38%, which shows a strong recovery in traveling following some of the COVID shutdowns across the world. Good news for shareholders as well. In fiscal year 2022, Visa repurchased 56.2 million shares at an average price of $206 per share, which used up $11.6 billion of cash. And the board also authorized a new $12 billion share repurchase program in October. And looking at these results, Visa had a fantastic fourth quarter and 2022 fiscal year, and they aren't really expecting that much slowdown, even given the macroeconomic challenges facing the world economy. So that's really good to see, I think. Looking now at the balance sheet, Visa currently has $15.7 billion of cash on hand, which is about $800 million less than they had last year. I would consider that difference to be not very significant. Current assets right now are $30.2 billion, and this is fantastic to see compared to their current liabilities of $20.9 billion. Hence, they have a current ratio of 0.69, which is very healthy and shows that they can easily pay off any short-term debts. The one thing that does look a tad concerning to me is the current maturities of debt under the current liabilities. As we can see, this figure is about $2.25 billion right now, compared to less than $1 billion in 2021. However, when I looked at the balance sheet over the past few years, going back to 2019, this $2.2 billion number is pretty much in line with prior years, and 2021 was actually just uncommonly low in this regard. So I really don't think the current maturities of debt is an issue at this point. They have $20.2 billion of long-term debt, as we can see right here, which gives them total debt of $22.5 billion when we add in that current maturity of debt that we were just talking about. This is very healthy in my opinion. So the first way we can look at this is that they have over $15 billion of cash on hand, which makes their net debt less than $7 billion, which seems pretty healthy. And then also when we look at their net income, over the past 4 years, it's been around $11 billion or higher. $11 billion was pretty much the low end of their net income over the last 4 years. And that means that they could essentially pay off all their debts using their net income in 2 years' time, which is a benchmark that I like to use to evaluate debt. And looking at shareholders' equity, right now it's $35.6 billion, which is fantastic to see, and gives them a debt to equity ratio less than 1, which means a lot more of their financing is coming from equity rather than debt. And all these factors are pointing to an incredibly strong balance sheet with relatively low debt. Currently, Visa pays a very modest dividend of less than 1%. Right now, it's about 0.9%. And this is a great thing in my eyes because it allows Visa to reinvest the vast majority of their income and earnings back into the business, which allows them to continuously innovate and grow their business over time. Because of this relatively low dividend, their payout ratio is very low at 21.4%, which, this Seeking Alpha screenshot is definitely wrong. I did the calculation on net income of about $15 billion. They paid $3.2 billion to shareholders as dividends. So this means, $3.2 billion divided by $15 billion is 21.4%. They have a pretty decent track record so far of growing their dividend with 13 consecutive years of dividend growth, and that growth has been pretty incredible over the last 5 years at an average rate of almost 18%. And just at the end of October, Visa did announce a whopping 20% dividend raise, which I was really excited to see. And because of the relatively small amount of Visa's dividend, it is incredibly safe in my eyes, and the humongous raises are awesome to see. The raises, I think, are likely to slow down some, but I think there's still lots of room for dividend growth ahead for Visa. Now, starting to look at some valuation metrics for Visa, the first thing we'll look at is the PE ratio, which is sitting right around 28 right now. And as we can see, this is slightly lower than the average PE over the past 12 years, which has been about 30. We can see in this chart of the PE that this ratio was much higher in 2020 and 2021, but has since come a bit closer to earth and seems a bit more reasonable at this point, though it still seems high at first glance. And one of the things I really like about Visa in correlation with their PE ratio is their earnings growth. So looking at this chart right here of earnings per share over time, Visa has grown their earnings per share from 85 cents per share in 2010 to $7 per share in 2022, which is a compound annual growth rate of 17.8%. And this is very interesting to me actually because this 17.8% is incredibly close to that 5-year average dividend growth rate that we just looked at over the past 5 years. Like with the dividend growth though, I definitely expect the earnings growth to slow a bit in the coming decades, but I think they can still maintain a pretty high rate of earnings growth, at least compared to a lot of other companies. Even though Visa is largely a tech company, they are classified in the financial services sector. So when we look at this sector, the average PE ratio is about 14.3 right now, which makes Visa look very overvalued. But I think Visa is a vastly different company than a lot of other companies in the financial services sector, like a bank like JP Morgan or an insurance company like Aflac. So we can also look at the credit services industry, which is a little bit more niched down towards what Visa does. And when we look at that industry, the average PE there is around 13, which looks even worse. But we do see that peers like MasterCard and PayPal have similar high PE ratios to Visa in the 30 or 40s. And I think in the case of Visa, it is hard to look at their sector and industry for comparison because Visa isn't all that similar to a lot of companies in their sector or industry. I would say they are very similar to MasterCard and fairly similar to maybe Discover, but really not all that many companies they are, super similar to. So it really isn't a super great metric of comparison, but it can't be ignored that they do look a bit overvalued from the PE ratio perspective when compared to their peers and the overall market. Taking a quick look now at the DCF calculation, Visa's fair value is $184, which gives a buy price of $165.90 when I applied a 10% margin of safety. So this actually looks fairly good right now for Visa. Even though the current price is around $195, that's really not too overvalued. And Visa was trading, below 180 by a little bit at the beginning of October. So I think they do look a little bit overvalued, but not really by all that much. Looking at Visa's 3-year chart here, the current price of around $195 is actually a bit below pre-pandemic highs of around 210. And I drew this long-term trend line here that the stock touched in March of 2020. And again, they just touched that trend line recently in September and October of 2022. If we zoom in to the 1-year chart here, we can see the current price is below the 200-day moving average, but above the 50-day moving average. And there is some pretty decent support as well in the 185 to 190 range, where the stock has touched a number of times in the past year and bounced off of. So right now, I think the stock looks pretty strong technically, actually. It could definitely fall more to the 190 or 185 range, but unless the whole market kind of crashes or sells off some more, I think there's a pretty good chance that the stock will just meander in the current range for a while, or maybe go up a little bit. As we have seen throughout the video, Visa looks to be in a very good position. They are deeply entrenched in the digital payments market, and their business is still growing quickly despite macroeconomic concerns, and their balance sheet is very strong. The market clearly recognizes these facts. Visa stock is currently down only about 11% year to date compared to the S&P 500, which is down over 20% year to date. Although the stock price does seem a bit overvalued at the moment, the stock does look technically strong, and sometimes it is okay to pay a bit of a premium for a good business. Although I don't personally own Visa, I manage a dividend portfolio for my brother, and he owns Visa in that portfolio. And right now, I generally like Visa below 200, below 190 is where I have been buying a little bit recently when it has been, below that range. And I was very excited to pick some up around $180 a month or two ago. So let me know in the comments down below if you do own Visa and what you think the fair price is. Make sure to subscribe to the channel so you don't miss out on future videos, and join the Discord for more in-depth discussions on stocks and investing in general. Thanks for watching, and I'll see you all in the next one.